Chapter 17, Financial Statements. Now, it's stated that you should have an awareness of financial statements, but not necessarily what that means. So we're going to just go over financial statements briefly within this chapter, just so you're aware of what is required. So there's a performance of an organisation between 2 points in time is the statement of financial performance, also known as the profit and loss account, or for a non-profit organisation in the income and expenditure account. The financial position of an organisation at any point in time is the statement of financial position, also known as the balance sheet. So, as accountants, we prepare reports on the financial position and performance of the company to either report to providers of capital overseas, banks, creditors, board members, regulatory authorities and shareholders for the purposes of investment or oversight. So these will be high-level financial statements. And then we would generate financial reports internally within the company for the purposes of, say, the decision making over management of what we're going to do, what we're going to invest in, profit and cost centres, and then also any controls like stock control, fixed asset control, that kind of thing. Okay. Now, in terms of our statements, let's just consider point A. So time point A in here. And we have this sort of financial position where we are in terms of financial position, which is assets minus liabilities is equal to capital. So all of our assets minus all our liabilities equals to the shareholders' capital. So it's the statement of financial position of the shareholders of what they have, as opposed to the accounting equation to asset equals liabilities plus capital. The accounting equation is trying to do debits is equal to credits, and the statement of financial position is trying to say what actually the shareholders own, really. So statement of financial position at time point A. So at time point A. Here. Then we're going to have some movement and improve performance. Yeah, so we're going to have some movement in there, and we've got some performance in there. There's profit and loss account here that has performed. So we've got sales and expenses, and the shareholders get that. So they've got some movement in there, and they've either gained or they've lost for their profit and loss account. They've also injected capital into the company, or alternatively they've taken it out in the form of dividends or what have you, or payments to them. So you've got this movement in reserves, there's movement in capital from point A. And then we get to point B, which is the financial position at point B. Assets minus liabilities is equal to capital at point B here. So that's all we've really got here is two things which you need to be aware of. Really. Financial position, balance sheet at points in time. Yeah, and then the statement of financial performance is the profit and loss account, moving between the two periods, plus or minus any injections of shareholder capital or payments payments made to the shareholders. That's really financial statements. In terms of who they're for, the financial statements are actually for the shareholders. So they're for shareholders, and now they're made available publicly. So they'll be so for limited liability companies, they have to put their financial statements within Companies House so that people can see them and then make decisions about whether they should invest or they should let them have credit or what have you. And then in terms of the ones that are quoted on stock exchanges, then they're available for the wider public, and the wider public can make investment decisions on the back of them, and also as well they need to be put in very prescribed sort of methods really, but they don't really actually necessarily get to sort of sue the company if things are wrong. In there, because really they're for the shareholders. They sue on the basis of prospectuses. That's how an investor would sue if there is a thing. But against that, the directors can be held accountable, and sort of if they do false accounts. Also, the accounts will be subject to audit as well to see whether they're materially true or fair. That's financial statements.